Hello everyone, welcome back to the channel. As this year is coming to an end, I have a really quick announcement for you in the new year in January. Part of my daily content will be uploaded to Substack and Patreon only, and I'm very excited to start working on new interviews there. There will be more written content and more ways for my subscribers. For you to engage, there is a subscriber-only chat. I think it will be a lot of fun. It will be a really great way to connect with like-minded people, to share your thoughts, and I think you will really enjoy it. I will go ahead and include the links to my Substack and Patreon in the description box below this video. Make sure that you are subscribed, and I look forward to seeing you on those two platforms. Global currency repricing is accelerating. The dollar is weakening, but does it mean that you should buy gold now? I will share my opinion in this video. If you've been watching the markets lately, and if you felt like things have gone oddly quiet, you're not imagining it. The holidays have taken some of the usual noise out of the system. But something very important is happening. The US dollar has just logged its worst week in 6 months since June, and Treasury prices have been climbing. The markets are increasingly positioning for what they think comes next, which is more Federal Reserve rate cuts, not this year but in 2026. Right now, attention has shifted almost entirely to what's coming. In early January, the December jobs report and the next consumer inflation readings are shaping up to be pivotal. Remember, the Fed has already cut borrowing costs 3 meetings in a row, and the dollar is already reacting to it. Here's what, for example, Peter Schiff posted recently to share his take on the weakening dollar. He says King Dollar's reign is coming to an end. Is that truly the case? Let's take a look at the details. A weakening US dollar is reshaping the outlook for stocks, for bonds and global assets as we head into 2026 and beyond. The United States dollar weakened sharply through 2025 as the result of a mix of fiscal worries and fading confidence in U.S. policy. And while the dollar is still historically strong, the shift matters. This is a structural change. After decades and decades of dollar dominance, to put some numbers on it, the United States dollar index is on track for its weakest year in more than 10 years. Through September of 2025, it was down nearly 10% against a basket of major currencies. Against individual currencies, the declines were even more striking. For example, the dollar fell more than 13% versus the euro and the Swiss franc. Over 6% decline has been registered against the yen and more than 5% against a basket of major emerging market currencies. That is not a minor adjustment. That is a real repricing of global money. So what caused such a sharp sell-off in 2025? It wasn't just one thing, of course. Some of the pressure has been building for years. Rising U.S. debt levels have been a constant concern, and those worries actually intensified with major fiscal packages, such as the Big Beautiful Bill that actually expanded deficits even further. At the same time, the U.S. growth, the idea that the U.S. economy consistently outperforms the rest of the world, that has started to erode. It's no longer the case. Add to that tariff uncertainty, and suddenly, the outlook looks less clear than it did even a few years ago. But 2025 also brought new vulnerabilities to the surface. Global investors began increasing their hedging of U.S. assets, and that is a big red flag in turn. The shift reversed a long trend of leaving dollar exposure unhedged. Back when confidence in U.S. exceptionalism, if you will, was very high, questions about policy consistency, the Fed's independence, which I covered in great detail in several videos recently, and geopolitical escalations, that has taken a toll on the global perception of the U.S. economic stability and reliability of its economic system. And so together those factors combined produced one of the biggest episodes of dollar weakness. In recent decades now heading into 2026, investors are wrestling with a few big questions. First, is this the beginning of a long-term collapse in the dollar? The evidence suggests that it is due to slowing U.S. growth, large fiscal deficits, and sticky inflation. All of these things point to continued pressure on the U.S. currency. In other words, the foundations of the dollar dominance are rotting. Yes, it is true that at this point in time, the dollar remains the world's main reserve currency and the world's main settlement currency. But there are new alternatives now. For example, the BRICS just changed the financial architecture yet again. It is very big news for global trade and investment flows. I will share the details in a separate article, that there's going to be an entire article dedicated to the new BRICS announcement. And I will post that article this weekend on my Substack and Patreon, so you're welcome to switch to those platforms and take a look if you're interested. Now, the second big question is whether the dollar's 2025 decline has finally made it attractive again. Yes, attractive again. At this point, you're probably thinking, what does that even mean? Well, despite the sharp drop in its value, the dollar is still believed to be overvalued relative to most global currencies. Out of more than 30 major developed and emerging market currencies, only a handful are more overvalued than the US dollar today. So while it's cheaper than it was, it is far from a bargain, and guess what? It likely means that it's going to decline even further. Which brings us to the next point. The two reasons I just mentioned are why investors are increasing exposure to non-US assets. Investors are now recognizing that many overseas markets may be offering more upside, or in other words, more earning potential. And so that is, of course, driven by their currency appreciation. Even a modest shift away from US-only exposure can improve your diversification and help hedge against further dollar weakness, which is expected. So investors are increasingly attracted to non-US assets, and that's where the capital is directed. Now, many channels here on YouTube are trying to sell you gold, and of course they discuss the weakness in the dollar, and they say, well, now you have to buy gold. As you know, I do not sell gold, and I would encourage you to be very, very cautious and very skeptical of those who do. You need to do your own research, and you need to consider your personal circumstances. You need to look for unbiased experts, those who are not looking to sell you something, and you need to then make your own decision. But if the dollar continues to weaken, finding a true alternative isn't so easy. Gold has become more popular as a hedge. Yes, but remember that it does not produce cash flow. It is hard to value. And the reality is that it can swing widely with speculative sentiment. So with that being said, investing in gold when you hear the news of a weakening dollar may not always be your answer. Now, ultimately, the dollar's weakness in 2025 is a turning point, and you need to stay tuned. You need to be aware of the most recent developments. It is very, very important and life-changing in terms of your financial health and economic circumstances that all of us depend on. I will keep you updated here on YouTube and over on my Substack and Patreon. Thank you so much for watching. I truly appreciate you staying with me and watching this.